A very good afternoon, everyone. Apologize for um, disconnecting from the webinar. There's a little technical difficulty. Sorry about that. I'd like to quickly reiterate today's topic for the CPD session. It's Law Office Expense Management. It's accredited for 1 hour of professionalism CPD credits. Attendance links are being shared on the chat window. We would be sharing it every 15-20 minutes once, so do not panic in case you've joined a bit late. I'm guessing that most of you have noted down the topic. I'll move the slide to the next one, but if you're in case not able to find it, please use the chat window, which will also have the attendance link and the topic details. Thank you. All right, so there was a break in between while I got disconnected, but we were discussing about what are disbursements and how to manage them. Now, I'm just going to briefly run over today's agenda. We're going to see what are disbursements and what are office expenses, the differences between disbursements and office expenses. Now, we're going to learn them. I'm sure that many of you have disbursements, incurred disbursements in your practice, and sometimes you are not well aware of how to manage them and include them as part of legal fee and try to invoice your client along with your legal fee, which is not the right way to do. So we're going to see what are disbursements, how do you manage them, what is the right method of accounting, and whether you can do that from the trust or you should only be using general, and what are the type of disbursements that can be done from trust and general respectively. How can you recover the expense and get paid for it? What are the expectations of your law society when it comes to disbursements, like, expense books, disbursement journals, and maintaining certain, method of payments and everything inclusive of that. And also about the office expenses, which is the other part of today's topic. And how do we maintain these business and office expenses? How do you categorize them? And how do you, analyze them when it comes to tracking down all of these expenses? So this is what we're going to see today primarily, and starting off with disbursements. In layman's terms, expenses that are incurred on behalf of your client by your law office is called disbursements. Now, yes, we do have disbursements in most of the area of practices, ranging from a simple photocopy, printing paper, or to maybe court filing fee and processor fee extra. These kind of are basically expenses that you've incurred on behalf of your client, which you're trying to claim from them, which is not part of your legal fee, by the way. So it's not right to include them in the legal fee. So you need to record them separate of legal fee, so that you can manage the taxes that you have spent on, etc. So, when it comes to disbursements, you're kind of very sure that you need to maintain proper records, right from bills to taxes paid, to whether taxes paid or exempted. All of these, as you need to provide proof of purchase or proof of expense spent to the client and ask them that this is what you have paid or incurred on behalf of them. So disbursement is just an act of paying out or dispersing money from either trust or general, to run business cash expenditures, dividend payments, amounts that a lawyer might have to pay out of a, person's behalf, which is part of the transaction. So these kind of are recovered from your client, and you need to maintain proper books for that. Only then, you could raise invoices based on it and get them paid. And on the other hand, you have business expenses, which are expenses incurred for running your business, for keeping your lights on literally in your law office. I mean, technically now with all the virtual office, let me put it this way, to keep your internet bills paid at least. So software bills paid. There's so much, including your law society membership fee. And yeah, there's technically so many things that you will have to pay for, whether you have, started having income or not. There's so many times when, as a new entrepreneur, you end up investing into your firm, having expenses, capital expenses, before even you start having income. And those are considered as business or office expenses. And expense needs to be recorded in the respective books to balance the accounts when you spend and manage your taxes. Now, many times we do not track down on taxes. Now that leads to a problem where you would have entered taxes as part of the legal fee and invoice billing, but somehow you would have missed to manage your taxes if you have not added taxes on the money spent. So this is where HST or GST, your respective provincial taxes, plays a role, right? Because you want to record the input tax credit against your taxes paid. So now, business and office expenses are one such area where you will have to keep track of all your expenses from end to end. And please keep in mind that you need to record it in the books to balance the accounts then and there as you spend and manage your taxes. So that's what office expenses are in a nutshell. But now, what is the major difference between office expenses and disbursement? For example, disbursement is something that is recoverable from your client. You are spending it on behalf of your client. Please remember, it's something that you have paid on behalf of your client, and your client would pay it back to you upon invoicing to them. And why do you need to track a disbursement? Obviously, because when you are raising an invoice, you tend to, add in whether there was an HST, GST, PST included. Are there any profit margins, or are these anything to do without profit? Are they actual amounts? So if you don't track a disbursement, you don't know how much to get paid or recovered from your client. And if you don't track your office expenses, you will not be able to track the HST, GST component and your actual profit margin, which is totally unknown otherwise, because you will have to reduce your revenue from your HST, GST paid. So that way you will have the actual profit from the business calculated. Now, how to manage disbursements? We know disbursements are something that is incurred on behalf of your client, which is eventually recovered by them, and you get to be paid for not just your legal fee, but you also get to be compensated for your disbursement. Now, while you are recording your disbursement, how do you think you should be recording it in the sense? First, keeping it in mind that tracking it down as a disbursement paid on behalf of your client, and most importantly, how was it paid? Whether it was paid using a trust account, or paid using a general account, or paid using a business credit card. So make sure you're able to understand how this expense was made and how it is to be recovered and the reason. Now, as you progress, you will have to assign disbursements are always made on behalf of a client. So to record the disbursement, you need to record it under a specific client and matter, and then the disbursement will be related to that specific file. The same client can have two matters, but this one disbursement is basically incurred from one of the matters. So you need to understand how it is to be entered under the respective client and matter, and decide which of the portion is to be invoiced. Now, if you would have incurred $100, but you would want to charge your client $150 with a little profit margin, and then invoice the client and recover the expense from them. Of course, this will go part of the invoice if you have a legal fee. The legal fee is recorded first. Then you have disbursement on the next page and record the invoice and the expense recovery. So this is what you would need to definitely record as part of the steps. So before you raise an invoice, it's always recommended to do pre-bill, and it's recommended to also determine how are you recording it? Are you recording it as a paid from trust, or paid from general, or paid from credit card? But these are to be, and how are these to be determined? These are to be determined based on how it was actually paid, right? So that's the first point that talks about it over here, how it was paid and what was the reason for the payment. So these are expense. So these are what you need to keep in mind when you're really trying to, record a disbursement. Now, other than that, how do you determine how to record it under a specific books of accounts, right? Like whether you want to put it under the trust or general or credit card, or whether you do the actuals or whether you have it with the profit margin. So how do you do it? Now, when do you do it from trust? So trust is to be handled a little carefully. Now, keeping in mind the little disclaimer that whenever you are making a payout of trust or a disbursement from trust, keep it very simple. You don't want to have things with profit margin being entered under trust. You want to have court fee, other fees, that are paid directly from the trust account. That does not involve any profit margin. And when paid from trust account, it's actually a plus point. It's actually an advantage where you do not have to recover any expense, because you are using the money that is sitting in the trust to make this particular expense or disbursement. It is not your money after all. So, you just have to show it as an expense from trust. And at the end of the day, this will reduce the amount of bookkeeping required, because you don't have to literally, go through several steps of whether there's a profit margin or what am I going to enter on the invoice, what was the actual payment. No, nothing of that is needed here. If you're doing it from trust, just keep it very simple. You do it for court or other kinds of filing fee extra. And when paid from trust account, you don't have to worry about recovering the expenses from the client. You're just using the money that's left in the trust after all. And you're going to be able to just show it as an expense made from trust account. And at the end of the day, this will reduce all the needs for you to, keep a track of bookkeeping, like versus, let's say you're doing it from the profit margin. You need to determine what is that portion that needs to go on to the invoice. What is the portion that you actually spent, which is the top portion and the bottom portion in uLaw, if you see, right? So as part of that, you also have, to record information such as how it was paid for, the reference numbers. It is still there as part of trust also, but it's a little bit more, complicated with, I won't say complicated, it is a little bit more with a lot of options available to you, whether it's general cash or business credit card, etc. So paying from general or business credit card or owner's pocket, you need to record the information with date, appropriate taxes, how you have paid for, which is the method of payment, and record it under, again, the specific client and matter. And if the disbursement was paid from bank, credit card, or your personal account, or by someone else, you need to specify that as well. Okay. Now let's go back in here. All right. Now the next part is types of disbursement. Now, as part of type of disbursements, there are several types of disbursements. Some of them are profit-oriented, like printing pages or photocopies, and some of them are basically, to be directly done from trust, like filing fee and court fee, and all of these are to be directly done from trust. Now, what needs to be entered from trust and what can be done from general account is what we're going to see. With the types of disbursements, if it's a billable, you can do it from both trust and general. If it's unit rate, which is, let's say, photocopies, unit rate, mileage for, gas and travel time, all of these are only general. Whereas anything with recovery of expenses on actuals, you can use both trust and general. Anything with recovery of expenses with profit margin, you could use only general account. So anytime when there is a profit margin included, it's only general account, and outsourced consultancy on actuals also goes into both trust and general. But outsourced consultancy with profit margin is only general account. So keeping in mind that types of disbursements with profit margin goes only out of general account. Anything with actuals, you can use both trust and general. And travel time, unit rate, mileage goes only from general account again. And billable, like consultancy on actuals, can go from both trust and general. Now, you know how to record a disbursement. What are the types of disbursement? Now, how do you recover it? What needs to be done? So, first of all, you have to bring it to your client's notice that you have a disbursement incurred on behalf of them, which is how you're communicating it to them by raising an invoice. Record the expense information with the date of the expense and appropriate taxes amount and whether there's a profit margin included or not. All of this to be entered before raising an invoice. Then you raise an invoice. Of course, you're doing a pre-bill. Then you raise an invoice. Now, to get paid, there are two options. If you have money sitting in the trust account, you pay and you just have to transfer the money from trust to the general and get paid for it. If you have used your personal money, that is. If you've used your personal money, you further move it from your general account to your personal account, but which is owner's pocket. But make sure all the ledgers and journals are being updated as per Law Society guidelines. So, when you are basically trying to do your own money, pay from your own money, everything is totally available in there. So if at all you feel that the personal money is what you need to really use, go ahead, use the personal money, but end of it, try to reimburse yourself from the general account, but using the money that you have moved from trust to the general if you have money sitting in the trust. If you don't have money sitting in the trust, please make sure to directly get the payment into the general account by collecting it along with your legal fee, if you have a legal fee, or at least for the disbursements part. So to keep it clear, there are only two ways you can get paid for the legal fee and disbursements. One is the trust method, where you move money from trust to the general, and then from the general to the personal account further if you have paid using for the personal account. Or two is basically your, if you're basically don't have a trust account, but you have, you generally get the client payments into the general account. Then you have to raise an invoice with the legal fee and disbursement, or just the disbursements, since we're talking about that part. And then you directly get the money into the general account. So there is no need for moving money from trust to the general. But if you get that money still directly into the general and you have used owner's pocket, there's still one more step involved of, you having to move the money from general to the personal account. Or, let's say you paid using business credit card, there's another transfer involved in there. So that's about how you recover the expenses. Now, about the law society compliances. What is it that you need to do? Like when it comes to posting the respective journals and ledgers. Now, if you're using a software, these are inbuilt. You just have to download them because all that we want you to do is just add in the transactions and download it. But during audits, the disbursements, ledgers, and journals, both trust and general, are definitely reviewed. So that's why we say client's trust ledger, general ledger, journals, which includes, receipts and disbursements, and fee book and expense book. All of these are to be captured with appropriate amounts, taxes, and right from the time you have the particulars, you see at the bottom here with little screenshots. Particulars are what is exactly the expense you have incurred for, and fee book. And then you also have the general ledger with all these amounts. So when you look at the client's trust ledger and client's general ledger by itself, you can see a lot of difference, right? Because the trust ledger has all of these with disbursements and the balances, which is the running balances. Now, if you take the general ledger on the right-hand side, you have the invoices details, because obviously once you have raised an invoice is when the general ledger will capture information. So you have the invoice information, you have the fee collected, or rather at least the fee that was raised in this invoice, and what was the fee collected, which is the payments of the accounts, and balance owed. Now, when it comes to disbursement journal, which is at the center bottom or middle bottom, you would see that there are additional, columns that talks about method of payment and purpose of payment. So these are also containing the client matter numbers, and otherwise the amount is common in all. So these are what the HST reports will also show eventually. HST, GST, PST reports will also show eventually if they've captured expenses with taxes. Now, the next one is about office expenses and what are the types of office expense. How do we record it? Very similar to what we discussed under disbursements, but we're going to talk about office expenses and how do we maintain them, and what are the documents that gets generated when you're recording an office expenses. So now, office expenses is the act of paying out money, such as money paid to run a business, like I already mentioned. Could be rent, could be law society fee, could be internet fee, could be your telephone, whatever, mobile, internet, etc., everything. Anything that is used to run your office, to maintain your business, and that's what is mostly called as office expenses. And you definitely need to record them, vigilantly to arrive at the exact amount of taxes to be spent or to be managed. Now, in this part, this is where you need to maintain more, records, where you will want to keep a track of your taxes, because taxes paid on money spent or expenses incurred is going to act as input tax credit against your HST, GST, PST invoices that you raise for the legal fee. So because that becomes as taxes owings to government, minus or reduce the taxes incurred while you're spending, will provide you with the net taxes. Now, what are these types of expenses? Like I already mentioned, these could vary from any different range, starting off with the basic law society fee, which is compulsory, which is the membership fee is something anyone would have, irrespective of whether they have office or internet or bank accounts, charges, rent, property maintenance. These are all as you grow into a firm, and all these office management expenses takes place in your types of expenses. And you also have mostly common expenses like advertisement, gas bills. Now, these are to be maintained keeping in mind that they're repetitive expenses. The nature of office expenses are mostly repetitive, or they are to be incurred same way every month. It could be rent, phone bill, gas bill, utilities and stuff. So make sure that you are labeling them appropriately under the respective headers, which is also important. You have all of these that says advertisement. So you're able to compare these expenses. Now, the point behind labeling them or categorizing them is that, let's say you're recording expenses under furniture or maybe advertisement promotions. Now, when you're in 2022, you've recorded these, and you're in 2023 recording similar nature of expenses. So end of it, you can compare both the year statements and understand what is the, where you have spent more. You want to cut down on expenses and talk about it. So that way it's better to manage your expenses. So now the next one here is how do we record them? Now, we also saw disbursements. How do we record them? Under trust or general respectively, from the client matter respectively. And, you're raising an invoice, getting it reimbursed. Now, the same way, for office expenses, how do you record them? Record them as and when they happen. Now, this is a place where you tend to miss, or rather, this is a point where you tend to miss out on recording certain expenses. Or sometimes, if it's past the time, you might have to, you might miss out on recording them. So, to keep a track of these expenses, record them when they happen, right? Ensure that you capture the following information. You're able to note down the date, title as in what is the expense incurred for, whether it's a filing fee or a photocopy or, maybe a consultancy expenses. So whatever is the type of expenses, you need to categorize them, and you already have the total amount. You might want to make sure that you are arriving at the subtotal and taxes approximately at this stage, and the method of payment and other details too, so that you're able to understand who it has to be paid to, what is the check number, what is the method of payment, all of them entered in there. And appropriately, remember we saw a field that talks about method of payment, and in one of these slides, it's because you are able to capture whether it was check or whether it was electronic fund transfer or cash, whatever it is. So it is important to track down it'll be something that's helpful to track down when it comes to recording all of these information. They might really be small when it comes to recording these expenses, but it is definitely helpful from a standpoint of how is it paid, whether it was paid using the trust or general or credit card, or owner's pocket. How is it paid? And when you determine how it was paid, you're able to record them individually or use the bank imports and record them under the respective matters, or you can just import them in batches when you're doing your monthly accounting. So you can also do that. But my humble suggestion would be either to use the first or the second one. Don't wait until you report or record them in batches. There's high chances that you might miss out on something. So that is one of the ways in which you do the recording of accounting transactions. And the next one here talks about what are the documents that needs to be maintained for an office expense. Like we discussed for disbursements, which talks about, maybe adding in disbursements from trust or general, and what type of disbursements to be added from trust and general, and what kind of documents needs to be provided or produced for that. Similarly, for the office expenses too, you have some documents that shows very clearly what are the expenses input, what is the HST or GST payable, and expense statement, profit and loss statement, and lastly, the borrowings report. So all of these statements shows you information such as, whether there's borrowings paid or whether there's, maybe a method of payment that is missing. So you can immediately track it down and enter it so that you have all of the description entered in there. Now you have, let's take, for example, expense report here. Now expense report has the date and, whoever was the client for whom you have paid it on behalf, or you have a vendor to whom you have paid, and then you have a description, and you also have the HST and other expenses captured in there. Now, when you go into the HST report, you would see the other way around. You would see the HST report, and you'll also see, maybe have the business reporting expenses, everything covered with the expense, HST, and total. And when you go to the HST report, like I already mentioned, you would see the other way around. You would see the expense part separate of HST, and you would see what are the input taxes and otherwise, right? So this is where we want you to add in with subtotals, totals, whether tax is included or not. And you also have the borrowings reports that shows you all of these information. Now, there are different set of documents that gets into all of these: expense book, fee book, expense statement, profit and loss statement. So it's just one time you add the information that gets divided, or that gets rather distributed amongst all of these reports, because they're all similar ledgers and journals reports that gets printed out. But end of the day, what goes into it matters a lot. Right from the date, whether it matches with your bank statement. So this is where I recommend you to record the expenditure, then and there, which is when as it happens, right? And there's also otherwise office expenses that would be helpful for you to understand the analytics. Now you have your analytics on your expenses, such as whether how much of the expense was made on the rent. What is the top expense? What is the ratio of expense when it comes to your expenses on monthly, quarterly, and annual or yearly billing? And what expenses are to be minimized, or are there some expenses that are, hazardous, that are kind of too much to your firm? Can you reduce on them? And these are what you will help you to understand the health of your business better too, because all this while you were looking at just the profit margin, and maybe you had a very vague idea of how you were doing. Whereas when it comes to expense analytics, which is probably done only if you enter the expenses properly, analytics helps you visualize the data in the form of pie chart, table, and all the insights. So you have more idea of communicating better on, or rather interpreting it better. So you know that now how much you spent, what is your major expense or major chunk of expense, and you're able to know what is unknown to you so far. Like I said, instead of having a vague idea of what your profit margins, you would be having a better idea of what is it exactly now. So know the unknown and react to it and plan for it. That's what mostly, I would say. And this is one of the expense analytics right here. And I just want to top it up saying it's pretty hard to do all of this manually these days. And I don't think any one of us are doing it anymore. But there are some of us who lose out on using a practice management system. And I would highly recommend you to try it out, based on which you can, benefit from following. You can definitely record an event when and as they happen, and you're able to match your financial records and bank records, and it's very close to helping you with reconciliation, as simple as it is. And you maintain all of the documents, and you're able to let your software work for you. You don't have to just imagine all of these slides that you were working on, and rather we were talking about. There's so many of these documents, right, from expense book to, maintaining all of these records. It's not easy for you to try doing it on your own. So, and ultimately, it's not just compliances, it's not just accountability, but it's also the ease of use and analytics that really helps you to tackle this better. So I would highly recommend all of you to try it out. And if you're not a uLaw user, I request you to sign up for the free 30-day trial. We're almost at the end of the year, so please, refer your friends, or you yourself attending a webinar today are not aware of this. I would highly recommend you to sign up for a free 30-day trial and check it out. So you can check out the benefit yourself. That'll be really helpful. Just would like to quickly take a pause to see if there are any questions, and the attendance links are being posted from on a chat window. Please do take a look at it. Provide your attendance and make a note of today's topic. I'd just like to, walk you all through uLaw and the expense and disbursement management in there for all of you. Viewer number 15. Oh, unfortunately, I cannot turn on the mic because everyone is muted. I'd highly recommend you to, since it's a CPD, I'd request you to send us a question here on the chat, or if you leave us with your email ID, I can have my teammate reach out to you. Thank you so much. All right, so right now I'm in uLaw. There are a couple of things I wanted to definitely show you all. One of them is disbursements. How do you record a disbursement? How do you determine the nature of the disbursement? How can I record it? So we spoke about a couple of things. We spoke about spending it, tracking down on how you've spent it. That is one of the first things. So whether you paid it from trust or you paid it from the general cash, other accounts, including owner's pocket. And the other one is, sorry, I'll have to take a pause here. There's a question here, which is nice. If we are importing, do we still need to add an expense? Yes. I mean, when you're importing the statement or connecting the bank and importing the transaction, you're already adding an expense, if that's what you mean. But you don't have to separately add any expense. No, you don't have to add any expense separate if you are already imported the transaction. Yes, that's right. Great. So yeah, with the Bank Connect and Import Bank feature, things are going to work differently. But what I'm talking about now is only for you to understand how can you differentiate between various methods of adding disbursements and office expenses. How could you streamline this? So one of them is to understand how you have incurred or how you have paid this a disbursement. Now, let's say if you're paid from trust, which is what, to help you keep things simple. Now, if you're paying from trust, mostly they are things like, court filing fee or things that are not to be charged with keeping in mind a profit margin, right? So let's say you have a tiny little amount sitting in trust and you are entering these disbursements. And once you have the retainer, you decided that you pay the filing fee. So you click on Add New Disbursement, paid from trust. So you're just going to enter that over here. The method of payment, remember we already discussed about it. I would like to know if it's something that's legitimate. What if you just add a fake expense, right? So of course, to track down on these in your bank, who is it paid to in the description? Let's say court filing fee. Paid to. And you can just simply click on payments. So now that is one of the ways you could just simply, track down your expense, keeping in mind all of these methods. And let's say the next one, you know that it has a little profit margin involved, which is the most simplest and common in a lot of law offices, which is photocopies. Well, let's say we have a photocopy charges. It's randomly you're charging them $25 plus tax. But how much did you incur here? Zero, because you used your office printer. Now you might ask me, hey, if I used my office printer, isn't it supposed to be having or included having to include my printing paper, ink, and a portion of money that I spent for the printer? No, those goes under the office expenses, because irrespective of having to spend for this client or not, you would have still bought a printer for your office. The ink and paper belongs to your office. So all of them go under your office expense. You can't duplicate the expense here by adding once under the office expense and again once under reporting expense for a disbursement. So you leave the bottom portion empty. This is absolute profit to you. This $25 plus taxes is absolutely a profit to you. So you only add them on the top portion. So since this has profit motive, I am not entering this from the trust, because trust is client's money. You cannot violate. You cannot just like that take it out of your trust. And you need to justify what is it that you're paying for. So never try to do anything from trust that includes a profit margin. Okay, please remember that part alone. That is one of the key points for you to remember. And now save it. So once you do that, you are able to understand clearly the bifurcation between, or rather the differentiation between, expenses or disbursements to be made from trust and disbursements that can be made from general. Now, very clearly, if you're using uLaw, we tell you, hey, for actuals, mileages, units, please use this disbursement. You know that if it's billable, it goes from general. If it's mileage, it goes from general. If it's unit rate, again, it goes from general. So let's say I travel to my client office, travel to client's place, or rather client visit. Just put it simple, client visit. And it took me about a duration of, 30 minutes. And the rate is, the council travel time. Yeah, there you go. Maybe if it's tax exempt, you can enter accordingly. And the description not needed, I have entered the item name. As simple as that. Just keep things simple. So you've added them all. Now I want to raise an invoice to show you. Okay, I'm going to skip review. This is only for disbursements. I'm not doing dockets right now. I only want to claim for the disbursements, and I want to show you how it looks. And this is only an invoice, how it looks in the invoice, but I'll showcase you also how it looks on the fee or the other journals. Okay. Now when you go back in here, this is the invoice. There's no legal fee. But the disbursements, couple of it that I just added is right here. Photocopies and client visit, 100 in overall, plus taxes, 113. So now, let's say I go back into uLaw, okay, click on question mark, and this client pays me directly $113. So I take the money into my general account just for the $113, leaving out all the other things that they owe me. So the $113, I would just put it under email transfer because that's how I received it. And received from Sunny. Let's say you're done here. It's a cycle where you have did the disbursements, invoiced the client, accepted the payment for both types of disbursements, paid from trust, paid from general with profit margin, and then paid for travel time. Now, you go into accounts, all of these will be shown in the accounts under the general account. So let me show you the first two things, which is, one thing will be debited from here is the travel time. And, which will automatically be recorded. And you also have the client payment that was received here eventually. Okay. The other one that I can, think of right now is paying out of the trust account, which is for the court filing fee of $200 with today's date on the top. So disbursement, the payout from trust, Sunny Daniel for $200. Now, if I go into compliance to download the general disbursement journal for today, so let me just include today, or I can also do it for Sunny Daniel alone. So I want to show you how the general disbursement journal looks, and you will look at anything that was disbursed from here. So for this client today, you did not have anything that was disbursed from the general. However, you did have client's trust payment, which was today. And for Sunny Daniel, you will see the amount of $200 at the bottom. Yeah, this is the one. Okay, so you have the method of payment and who it was paid to, description of the file, and description of the matter, and what was the expense for. So all of these entered in here, which is captured and shown in your account. And the next one that I would like to show you is client's trust. So give me 1 second. Over here, you have expense book under document generation. So let me show you the expense book for today's date, and you will see all the expenses that you've made. There you go, which is having any expenses here. Will show you all the expenses from the office expense or disbursements, anything made from the general account. Over here, you have add expenses, office expenses. Let me show you now how it looks. I'm going to add a simple, maybe a law society fee or a monthly subscription. Okay. So software charges. Okay, maybe $65 inclusive of taxes. So you want to enter it here, paid to Superfluid Software. I'm trying to add as much as information as possible. So you will see how it looks when it gets captured. Method of payment, it was a direct debit. And the reference number, same thing, enter it here, click on submit. All right, I have a question here, which is really nice. Can we take disbursements into trust and then transfer to general? Absolutely, yes. Absolutely, yes. If you have money sitting in your trust, and let's say you have paid for it from the general account, you have to move the money from trust to the general to pay yourself. Yes. So for which you are invoicing, and which is what, let's say, the transfer is for. So today I made a $200, disbursement or something. It will show up. So for example, with today's date, I have made about, $115. So let's say I want to transfer this from trust to the general. These two disbursements, if you very clearly see, $113. And that's what was there on the invoice. What was it? It was for, I think it was for the photocopies and the client visit, put together $113, right? So this is what I'm going to transfer from trust to the general today, because I have money sitting in trust. So I want to pay it myself. So move it myself. So whatever is the method of payment, you give the details respectively and complete the transfer, and you move from trust to the general. You can also download a Form 9A, so that way everything is complete in one go. So if at all you need to have a copy in your file, you need to go to the Form 9A and add it over there. So these are all auto-populated again in uLaw, right? Now, I was at the point where I added an office expense. So I want to show you all that I added an office expense for uLaw monthly subscription maybe. That's part of the software charges. So over here, you see the software charges. Now, if I go into expense book, document generation, expense book, I'm going to download it after I added this. And I want to show you how it looked before and how it looked after, how it's looking after that. So now I just added a business expense, office expenses, not a disbursement. So you all see there's no file number assigned to it. It is just a general office expenses. So it's captured as software charges as description. It's captured amount before taxes, amount after, taxes amount and amount after taxes. Also has the date and the client or the expense description. All right. So the previous one, which was done, I don't have the transaction here because it did not capture, it did not go into that particular expense journal at all. So only if that was done, you would be able to see that. So I think you have seen how to record and disbursement, different types of disbursements. If it has profit motive, to use general account, mileages, units, again use general account. If it is more of a trust, keep it simple when it's from trust, done directly from trust, keep it simple. If you're at doubt, always do it from general and then transfer money from trust to general. So, you're at least not at the question or you're not at doubt, I know if you're directly doing it from trust, your bookkeeping is much simpler. But if you're at doubt, what can you do? I mean, like, than breaking your head, I would say just keep it simple. Do it from general, invoice your client, transfer money from trust to the general. And then if you are paying yourself further, you would do another transfer later. All right. So I think I'll quickly pause here to take questions, but I want you all to try this out at your end, whether you're uLaw users, non-uLaw users. Please feel free to use our account to play around with disbursements, get some idea on how the documentations works, and also let us know your feedbacks. I'll be happy to take more questions here. I'll hang in here for another 5 minutes. So please do let me know, and I apologize for a little bit of confusion with the technical difficulty that we faced in the first 5 minutes. I had to extend 5 minutes because of that. Thank you all for joining in today. Might have been a little helpful for you all, considering the year end is approaching. But if you all have any questions, please use the chat window to ask more questions. Thank you.